Okay, great. Welcome. Great to be here. Thanks, Marlin. Firstly, just to double check, you can all hear me okay, yeah? If you can, just put a little note in the chat in the workshop. Yeah. Okay, good. Okay, so I'm Gagan Daphu from Tesseract Trading. I'm here to present the Tesseract model, as Marlin said, and also we're launching a trading room here at Mr. Topstep. Essentially, what we're offering within the room will be analysis on the S&P and the ES. And within that, we'll offer real-time trading signals with specific risk on trades. And obviously, there's a live trading room, so you can ultimately chat to us and ask us any questions. But we'll essentially there'll be mainly myself or John, who I'll talk about in a minute. Basically, you'll see our live trades. Okay, so let me give you a bit of background about ourselves. Just 1 second. Okay. Sorry, I just had the live squawk on there for a minute. Basically, the model was built by Dr. John Papadakis. He's got a PhD in nuclear physics from the University of Athens. He's essentially the brains behind the model. He essentially built it a number of years ago, and over the years he's been really just modifying it and tweaking it. And he had some major tweaks in the last 6 months or so, which is really one of the reasons we're here today. Myself, I'm essentially a broker in London. I've been a broker for about 14 years, and I've traded my account for around 10 years. But now, essentially, what I do is I run some managed accounts primarily built around John's model. Again, I'll go backwards a little bit. I met John through a trading chat a number of years ago. And initially, there was just a few of us. And really, the numbers grew and grew to the point there was about 150 people. And then John decided to set up a service, giving the analysis and signals. And really, I was more interested in managing accounts using the model, which is one of the things we do. But after speaking to Danny and Marlon and stuff, we also thought it would be a good idea to set up a room at Mr. Topstep. So look, let's get right into it. Really, what are the principles about the model? Well, look, going back to John, as I said, was a nuclear physicist, or is. He essentially wanted to see if there's any connection with his work and his research in the field to the markets. And what he found was, with the financial instruments, the S&P, the DAX, commodities or currencies, he found that the movements were very similar to the way quantum particles move in nature. So if you look at particle physics, you can generally predict the movement of an electron to within an accuracy of 95%. So John found, using the same algorithms, he was able to highlight key, we call them like reaction areas, where the markets or certainly prices would move. Now, using all of this data, what we've essentially found, or what we the data we want out of it, is one of the things we get is we call tight entry zones. So what I mean by this is specific levels where we have a high probability of reaction. Okay, so let's just take this example. Market opens at 2700. We may have a tight entry zone, as we call them, at 2690 to 2688. What that says to us is we've got a 2-point area where we think the market will have a bounce from, and that would be an area where we look to take a trade. This obviously provides us with a specific strategy. And what that essentially is buy and sell zones within these tight entry zones. And because generally they're tight, and when I say tight, they can be less than a point, they can be up to 7 points, but generally we'll look for the smaller ones to basically minimize risk for every trade. One of the things we found when we first started the model, we were using quite wide stops, but now we've essentially magnified it to the point that we can take very small risk, essentially with very high reward. Okay, so let's go through the model output. What do we get from the model? Well, we get a number of things. The model gives us a bias ultimately. Obviously, every day when you're trading, you need to decide if you're going long or short of the market. The model gives us a bullish, neutral, or bearish bias. Currently, the market, or the S&P, as we call it, is in this neutral range, and that range is between 25.99, let's call it 2600, up to 28.16. Now, what that says to us is we've been trading really on the long side, because normally in these ranges the market tends to move from one extreme to another, slightly like market profile, where people will look for the price to move from a low volume node up to a high volume node, or migrate from these areas. So at the moment we've been playing the long side. However, if the model does get above 28.16, it turns bullish and we have much higher prices, and again we'd be looking to buy dips. If, for example, we do fall below 25.99, the model will be bearish, so we would be leaning to selling rallies. So as I said, it gives us those levels, give us our bias on a day-to-day basis, and also for our swing trades. We also have targets. These targets are levels which are produced from the model, which we would normally use for swing trades. So let's say, for example, the market was trading at, let's call it 2500. The model could suddenly produce levels of 2580, 2600, 2650, and these we could use for swing trades, essentially. We also have something called key volatility levels. These ultimately give us smaller reactions. So let's say, for example, we've bought a zone, market moves up 10 points. These levels will highlight to us where we should be looking to scale, and also where we might find some shorter term resistance. We also have something called a proprietary indicator. This indicator basically gives us overbought and oversold. Sorry, I've just got a question there. Well, let's see, it's model. Yeah, we will. I'll show you the charts shortly. But the model indicator essentially is a proprietary indicator which gives us overbought and oversold levels. Okay, so yesterday, for example, the model had got on its daily oscillator pretty oversold, and towards the end of the day, that gave us some indication that we should start taking longs again. Again, I'll go through all of these. Entry zones, I'll cover again in more detail, but as I said, these are ultimately the levels that we're looking to do business at, and they're very specific, which is one of the benefits of the model, i.e. 2-3 points. As I said, sometimes they can be wider, but generally very tight zones where we'd look to buy or sell the overall market. We also get something called the SPX or ES path. Again, I'll go through this shortly. It's basically a path of sort of what we expect the market to do that day. Again, that's written using the levels that come out of the model overall. Okay, so let's move on. Next slide here. This shows us what you would see, okay? And this is the way we illustrate the data. So let me just get the cursor up here. Here you can see it says model bias. As I said, at the moment, we're neutral. We're expecting at some point the extreme, which is 28.16, to be hit, okay? Here we have our model targets. These ones are just here. Again, this is actually back from the 8th of February, but we had targets at 27.40, 27.45, And at the time, this one at 28.24 is highlighted in grey because it's ultimately not live yet because we haven't broken 28.16. But generally speaking, if you're long from February or even January, these were the targets you were looking for. Now, these are your key support resistance levels. Again, these are areas where you look to scale or where you may even take some longs. And this one's very interesting here. This is the intraday volatility level. These are published after the first hour of trade. So let's say the market opens up, it's quite choppy. We got some data out. After the first hour, we'll look at these levels quite carefully. And certainly I tend to look at these lower ones, the support 1, 2, 3. Now, let's say there's a tape bomb. Trump comes on, starts talking about tariffs. Suddenly, we see the market start selling off quite aggressively. In my experience, the market would generally bounce from any of these levels, or certainly the lower two. In an extreme case, I would say 80% of the time, if not more, if the market's really selling off, it would bounce from that third one. So we already know where we're looking to do business. As I said, it's quite good because you don't have fear of where the market's going to. Obviously, if you suddenly start seeing a 60, 70%, 60, 70 point fall in the S&P very quickly, it's quite tough to work out exactly where you want to buy. You think, okay, it's gone down 30 points. I should buy some here. You get stopped, goes down another 10 points. You try and average. But using these levels, you've got some quite clear cut areas where you can look to do your trades. And as I said, generally speaking, I found on an extreme day, 80% of the time, that if the third one gets hit, that's a great buy level. Here we have the oversold and overbought indicator. Yesterday morning, this indicator was way up here, but by the afternoon, it'd fallen all the way down here. Now, this basically told us that the market was in this red category, which was basically near oversold. So towards the end of the day, we had some buy levels down at 60, I think it was 63.80 or around 64, and that was pretty much the low. And now obviously it's moved up a bit. This is the weekly one. Again, in December last year, when the market fell quite dramatically, I think this was way down here. And I think John was going long at around 2,300 at the time. I think this daily one was almost at zero as well, which is very rare. So again, it gives us a good indication of when we should be buying those dips in the market. But this is issued on a daily basis. So this would be in the room. So first thing in the morning, we normally put it up around, I think it's about 7:30, 8 o'clock GMT. The way I'd use this is I'd go, okay, what are the model targets today? I'd be looking at these. I'd be looking at some of these levels, and I'd also be looking here if the market is oversold, overbought. If it's way oversold, you want to be getting ready to take some longs that day. Okay. Next chart. This is the path that we draw every day. Okay. John issues this around the US Open, let's call it 15 minutes, 20 minutes before. And what it does, as I said, it's a path for what we expect for the day. So we normally put in 2 or 3 sort of hypers, as we call them. So for this example, if the market has a push up early, you would expect the market to have some resistance around this area. That would tell you, if you are long from here, to be wary up here, either scale or get ready to get out. And if it starts to drop or you miss this move, you'd be getting ready to buy around here. Again, if you bought around here on a move up, this level here, you'd be getting ready to either scale or be cautious. But if it does follow the white path, it would probably move up to there. Now, if you have another sell-off later in the day, again, you have another area where you'd be looking to do business down here. But overall, it gives you guidelines of, if the market pushes up early, whether you should be getting out, or if it has an early sell-off and holds some early support where you should be buying. Again, within the room, This will be posted between 15 minutes and 30 minutes before the open. So you know, you can have a good look. It gives you a good visual of what to expect with the market. But as we all know, the market can do anything. But again, what I normally do is write down the levels so I'm prepared. Again, as I said, where I want to do business. And in my experience, what we find is the white path is normally the dominant path. In a slightly weaker market, you know, you can get the black path. And in a very strong market, you tend to get that orange path. Okay. So what do you get with us? Well, you get your daily trades. These are intraday trades. On a volatile day, you could get, you know, 10. On a less volatile day, you may get 2. It just depends on what the market's doing that day. We get core trades. Core trades are essentially large swing trades. Obviously, on a day-to-day basis, what most traders are doing, should we say, is they you know, are looking to make money every day. However, at certain moments, you know, let's say you were lucky enough to start stepping in as John did just after Christmas Eve. He was buying, I can't remember the exact figure, 23.50 or so, and I think he sold most of his position in the 2700s. If you're able to get some of those 10% moves on leverage, it really adds to your account. Okay. I've just got a quick question. Any stats on how well the daily targets work? The statistics actually are that the model targets have a 95% probability. I can tell you this, and I'll come through the stats a bit later, what the win ratio is. And at the moment, it's well above 70% on the entry zones. Okay. Going back to this, entry zones, I'll explain in a bit more detail in the next chart. But again, this is one thing you get every day. You get those entry zones, which give you a very precise level of risk. We use 1%. I would advise people who are starting off to use a bit less. But generally speaking, if you've got a tight zone and you've got a 2-point spread, then that's essentially your risk. That is your entry zone, and you want to risk 1% on that. And I'll use an example shortly. The path, as I just went through, that's another thing you get. And obviously the risk management. Obviously, a lot of resources that you get, they give you various levels and they tell you where you want to do business, etc. But I found a lot of people don't really give you precise stops and also how much you should be risking. And again, I'll go through that in the next slide. Okay, here is an example of an entry zone trade. Okay, so on this day, I haven't got the specific day, but this was the trade, right? The trade was long at 2682.2, stop at 2681. So your spread or your stop was 1.7 points, and we call that width. Okay, so let's take this example. Let's say, in actual fact, you used a 2-point stop. Okay, and let's assume you've got a 50 grand ES account. Okay, so using this system, I would say, okay, I'm going to risk 1% on this trade. Therefore, I'm willing to risk $500 for, as I said, whatever reward we're looking to get. At the time, we don't specifically know. We have an idea because we'll have some model levels or we'll have some key levels. But in this instance, if you'd taken, let's say you took 5 lots being 250, you got 2-point stop, means you're risking your 500. As it moves up 2 points, I would take half of that off and I would put the rest to break even. So now you're up 100, you're up 1% on your risk. And well, the trade now is risk free. And if you held it all the way to the model target, you would have made, I think it was about $3,750 plus your 500, 42.50, which is about 8% in the day. So this is the best part of this because you're generally only risking 1% for these moves. And because we cut half of it or scale half of it and go to break even at that moment, what you tend to find, as we call them, units of risk. Your units of risk can be anything from, they could be 1 up to 15. So if I go to the next slide here, this is John's performance. And one of the reasons his performance is so good is he's had a lot of trades here, especially around this period here in December and January, where obviously he's risking 1% and the market was moving around. I think, I can't remember where the VIX was, but it was in the 20s to 30s. So we're having 400 or 500 point moves. So as he was hitting his entry zones, he would catch a trade and it would fly up 20, 30 points. But obviously, you know, those trades, he was risking 1%, but he was making 7, 8 times his risk. And as the account's been growing, the performance has been going up. Again, you probably won't get this sort of thing as a newbie, but you could probably get close to it after a few months learning how the system works. Okay, now this is a slide of the room. Okay, so this is what we're opening here at Mr. Topstep. This is just a screenshot from today, actually. So I will generally be in this room, maybe John occasionally, but you know, I'll highlight exactly when we're buying trades, when we're scaling, when we're putting the stops in, and I'll be talking you through the process. Here you can see in the morning, I think this was today, we've got the morning note, which is there, the model levels, which are posted here. You got your entry zones. These are these zones here as well, with the chart. And then we've got some other research as well we put here. So essentially you can come in the morning, you can see your path, as I explained before. You've got your buy and sell levels. We've put them here on the chart so you can see it visually, where you want to be buying and selling, putting your stops. As soon as we do buy it, we'll issue the trade here. We'll also issue where we go to scale, and then we'll also issue the stop. As I said, there will be other comments which we'll post here during the session. There's something we've been using recently, which is it's a bit like an analog called a fractal, and the market seems to be following that path. Again, that research I would post here. But as I said, really, it's a very simple process. And as I said, we taught you through exactly what risk you should be using. As I said, I would probably suggest you start with 0.5%, but you could start with 1%. But you can see your accounts growing quite quickly off it. And that's John's performance, which I've showed you. Have we got any questions so far? You can type away if you've got anything now. Let's just go through these things. Okay, so normally the price is $225. As I said, we're doing this for Danny, so we're doing a room. We're doing a trial for the first week, which is free. So any of you want to test it out, you basically click on the link, which that's for Tesseract. That's the Tesseract normal price. We're doing a price for Danny's room at Mr. Topstep. Yeah. And then after the first week, it's 169, and then the price moves back up. I'll post the link as well, but Marlin will send everyone the links for the sign up, and that's pretty much it. Any other questions? I mean, I can see if I can. I'll leave this here for a minute if you want to ask any questions about the room, etc. Marlin, anything to add if you're still there? Yeah, yeah. We'll be in the room from, you know, well, I'll be there most of the day, but you know, focusing, as I said, if there's a volatile day, we'll be there early, right? You know, like if there's some big sell-off overnight, a few hundred points. But generally speaking, we'll definitely be there from, you know, an hour before the open till close every day. But I'll be posting sporadically because I'm watching everything anyway, right? Me or everyone? Right. Okay. Yeah. No problem. Yeah, we'll be posting, Steve, today and Monday, and you know, from now on, essentially, we were sort of, I guess you could say we were sort of practicing earlier in the week, but yeah, as I said, the main key periods you want to have a look at, and I mean, again, everyone's in different time zones. Some of you guys are in the States, some in Europe, but I'll generally post the morning stuff around probably about 9 o'clock GMT, maybe even 8 o'clock when it comes out from John. I'll post some entry zones. I'll generally leave the chart on there, and then you'll get the pre-US Open information, the path, and then really what your sort of the idea is that you could sit there and you know, you can see what levels you want to do some trades, and you know, it may be the case that you have an alert on your PC. So if it hits a price, you can say, "Oh, just near the price." Say, "Okay, fine. I'm getting ready to buy this area. Has he gone long?" Um, and then you could see from my posting if we've taken the trade or not. Uh, but you could ultimately take the trades yourself just using that information. As I said, you know, you could go and you could say, right, okay, that's my buy area, that's my sell area. I'll put the orders in and leave it be. Um, and as I said, we're actually working on a automation tool. So you then just literally have to put the data in, and it would take well, it does take it takes you know, the profit after the first 2-3 points, and then puts the rest of it at break even, and then you can put another scale thing in. But as I said, it's pretty clear, and as I said, it's real time, um, so you can see exactly what we're doing. And really, the idea, I mean, I said to John a while ago, the idea is people want something which is not everyone, obviously, but a lot of people would like a system where they don't have to think too much. They just want someone to tell them what to do, and this is basically it. Um, and as I said, go on. Yeah, I mean, I guess you could log in sporadically and just check which levels you like. I mean, it could be the case that you know, you have one good trade in the day. You're like, right, I'm done for the day now, right? And then you look at it again the next day. Um, as I said, it's really up to the individual. But as I said, I've been following it now for a while. John's doing great. I'm making a bit of money off it. It took me a bit of a while to get used to because it's a slightly it's a very how should I put it? It's a very specific way of trading. You've got to be a little bit disciplined. You know, if the width of the trade is 2 points, moves up 2 points, you put your stop and go break even. Then after that, the rest of it's risk free. But if you follow that system, you will make money. And as I said, John's account's really blown up to the upside from it. But as I said, we're here for a week for free. So you can pop in, see the level, see how we're doing. And then obviously, if you like it, you can take it further. All right. Are those performance figures based on margin or based on theoretical? Okay, those performance figures are actually based on a 10 grand account that John basically started off with when he first started testing the system. Okay, it is a margined account, but again, as I said, if you've got 10 grand in there, and that's actually a CFD account, he was risking 100, which is 1% every trade. Okay. Well, you're using that leverage, but remember your risk is 1% of your overall account. You could use a lot less risk if you like. You could use 0.2, 0.5% risk. But let me just go over that again. And let's take this example once more, because I think that's probably, maybe I wasn't that clear on this. Okay. So let's go through the trade once more. This is your trade. The entry zone is 2682.2 to 2681. Okay, so that's you got a 1.7 point stop. Okay, if you're trading ES futures and you've got an account at 50 grand, right? Your 1% risk is 500. Therefore, you can take 5 lots, right? 250. If you lose 2 points, that's a $500 loss, right? What we advise is if you move up, by we call it the width of that stop. So let's call it 2 points. We advise you, as it moves up 2 points, you go to break even quickly. Okay, so you're risking 500, but you've made 500, you've gone to break even. The rest, you look to scale out slowly. It could be the case that out of your 5 lots, you're left with another 3 lots as a runner. You take another 2 up, 10, and then you leave another runner up for another 5 points, etc. But generally speaking, the key to the system is the risk. And as I said, some people decide to do their own thing and they just want levels. And they just like the levels, they want to see where the targets are, etc. But we're using this system to trade in that fashion, and that's how John's got his performance. But as I said, one thing we are working on at the moment is this automation tool. Okay, and it would be the case that you come in the morning, you basically type in these zones. Okay, that then feeds into your broker. We're using a UK-based one at the moment. It works with FXCM and IG markets. So all you do, you type in your zones, and the system automatically buys it at that price. As soon as it moves up your width or stop, let's say it moves up 2 points, it will take half of it off, and then the rest, it will move the stop up to break even, and then you can just put in your scale levels. But that will all be automated, and I think we'll have that probably in the next few weeks or so. As I said, we're testing it at the moment, but that will be ideal. And that way, it really takes off having to monitor the market quite a lot. I'm going to be using that for some managed accounts. And as I said, at some point, let's see where we go with it. But it will just be a lot more efficient than having to monitor everything all day. And we're focusing here in Mr. Topstep on the S&P because most people I think are ES traders, right? But we do actually have levels on the DAX and the FTSE, CL, and gold, which I'll post as well. But really, the day-to-day stuff will be on the S&P. As I said, that seems to be, the market which most people are after. That's why we've focused on that. Let's just check if we have any more questions. Steve, those tables, volume, yeah, all of those tables are posted in this room. So what I do is, you see here it says model levels today. They'll be there. So you just click on that link, and it'll give you that model table with all the information. And then I said, there's your entry zones. We've got some fractal work which we're looking at, so it's like an analog. And then there's just the commentary. But really, as I said, everything we have will be put up on there. Any more questions? I think I've covered all the questions. Marlon, anything else? Right. Okay. Here, I've got the link here anyway. That's it. So that's the link there. If you want to have the access to the free trial, and then that'll go to Marlon, and Marlon will go from there. But as I said, it's free for, well, I guess it's going to be 6 days or a week or so. So it's worth doing. As I said, if you trade the ES or the S&P, you'll find it pretty worthwhile. As I said, most people tend to get quite hooked on it. I've worked with John for a while, but as I said, I used to trade a lot of stocks and shares and stuff, and then I moved to trading futures, really just because of the risk. It was easier with the stocks as opposed to sort of, calling up clients saying, right, let's buy some Apple. You come in the next day and it's down 10%. What do? Do you hold it? Do you sell it? Do you stop out? At least with the futures, it was a lot cleaner. But as I said, I've built sort of building a business around this model, and as I'm sort of helping John really just expand it a bit more. It would be 100. That's for the first month, Steve, and then after that would go up. But as I said, look, you get your first week for free, right? You can take a shot. You might find that you like it. That's a month, Steve. And what I would hope really is that depending on your account size, but you should really be looking to be covering that in at least a day or a couple of days of trades. And that's the idea anyway, depending on your account size, etc. But I said, look, you got your first week or so, you can have a look at it, and from there, if you like it, you might find, wow, this is great. I'm definitely going to go with this, or you may not, right? But most people, they like it. I guess it sounds a bit steep, but 169 is not too bad for the first month, I think. As I said, if you get 1 or 2 trades, it should cover it. Any other questions? Have you got any other questions in YouTube, Marlon? That's basically what we have so far, and that's basically in John's account since December, because we were using a different strategy before. Back in October, we had a different strategy, and it was more swing trading. And then John changed, I would say, he sort of magnified the levels and started moving towards that, and that's basically when he started. But that would be, yes, that's I guess that's official. How about monitoring how well the daily targets work for Tesseract? What do you mean exactly by that, Gil? Are you asking me how well the swing daily targets, how often are targets hit? It just depends on when. And so, for example, we've got 28.16, which is potentially outstanding, or we had 20 last night. We had a new target on the close, and that was 27.83, and that got pretty much hit today. 70% hit first target, 50%. So let me go through the targets again, right? You'll have your entry zone levels, right? These are sort of short-term trades, okay? These would be intraday, okay? These we have, you could have a day where you don't have that many. You could have days with many, right? Then you have these model targets. Let's go back to this. Yeah, these ones here. These ones, we never have an actual time when they're going to be hit, but we do know that there's a 95% probability that they're going to be hit. That's what I've found. So that's if they're live, actually. So for example, we're neutral at the moment, so these ones aren't valid. These ones were valid. If we push above 28.16, the model will turn bullish, and this 28.24 will become valid, and then we'll get a whole load of new ones above that. But in terms of you know, how often they get hit. You know, it just depends on the time. I mean, this you've got some targets down here. If the market sold off and got down below 25.99, you've got this target down at 24.28. This could take 3 months to get hit. You know, it just depends. Yeah, Mike, that's a different sort of membership. That actually covers a lot more stuff. This service here at Mr. Topsef is focusing on the S&P, and really just one instrument, but we do have other instruments. I'll post some of them here because it's sometimes useful. People want to know some levels on oil and gold and stuff. Certainly with oil at the moment, it's been quite significant because it's moving around as a proxy. People are saying for this China trade deal, etc. So you know, if oil's been up in the morning or yesterday, I remember thinking, oh, I was saying to John, what's oil doing today? And he said, right, it's at a key level here, it should move up, and it moved in tandem with the S&P, so it's useful for them. JW6, swing trading with what instrument? Well, most of the swing trades are with the S&P. As I said, we're sort of using CFDs at the moment, but you could use, you know, you could use an ETF if that's what you preferred, or you could use, you know, your ES mini futures or the large S&P contract, whichever you wish, really. Not using options. We're not at the moment, but you could still use options if you're I say pretty experienced with that, and you know which ones you want to take in terms of your strikes and length, etc. The only thing I would say with options is you could probably use them on an intraday basis on some of the entry zones, but as we don't have a specific timing sort of part of this, you know, you're going to have to deal with decay, etc. So I'll give you a bit of a heads up. We've been using this fractal, as we call it, which has given us some sort of path, and it's judged most of the move up from January. You know, we've got some expectations that the market will move down next week, etc. But you know, we may have some downside targets, etc. But you know, that could be prolonged. Not using one-to-one spread. Yeah, I mean, as I said, the model really is based on, how should I put it? It's based using European clients who use CFDs. The difference with the CFD is you can basically buy all the way down to 10 cents a point movement. Okay. Unfortunately, in the States, you can't use the CFDs, but it means you can have a 10 grand account or 5 grand account and put tiny trades on and build it up slowly. Fortunately, in the US, it's $50 an e-mini, which I guess is one of the reasons why some people use the options instead, right? But yeah, I mean, look, you could use what you like. The main thing is you're looking at levels, right? And as I said, on a day-to-day basis, you'll get, as I said, you come in the morning, you see your path, you know your entry zones, right? You then, let's go to this. You then have my chart there, okay? These will be there, so you can just have your top step window in the background. And as I said, then if you've got a question, you just type one in for me there. But in there, I'll just basically be posting which trades that we'd be taking, etc. Because yeah, yeah. Um, we have zones for NQ, and I'll post those. The only reason we don't trade them that often is these zones tend to be quite big, so the stop tends to be quite big. So if you're, you know, you don't really want a 20 to a 40 point stop on the NQ, right? Whereas with the S&P, we can find it's basically fine-tuned anything from, it can be a point up to 7 points. But if there's a day where you see, hold on, I like this level, the stop is 2 points, that's a great trade. So for example, last night there was like a 4 point stop and the market rallied, you know, 30 points off that. Well, you're risking 1% to make 10% on those trades. So that's the reason we like this instrument more than anything. I mean, we do the DAX as well. I haven't focused that DAX on here. It might be something that we do, but at the moment, I think you should make enough money just focusing on this at the moment. But I can post the NQ levels as well for people who are looking at those. All right. Any other questions? Anything else? Yeah. Okay. Look. Well, look. Thanks, guys, for listening in. I'll move over to the room now. So if you've got any more questions, you can feel free to ask me, and I'll start updating where we are, and you can see you can have a real look at what's actually happening. But as I said, it's Friday, so if you're not trading too much, it's worth a little look. All right. Okay, and Marlon, thanks. And I guess you'll be sending out the emails and stuff, right? Perfect. Okay. All right, guys. Thank you. Cheers. Bye.